What if I told you that the investment world is quietly undergoing one of the biggest shifts in decades, right under your nose? A transformation so powerful that it is shaking the foundations of traditional mutual funds, giving birth to a new era of ETFs and unlocking the doors to something even more revolutionary: direct indexing. Investors who understand this shift early are positioning themselves for massive advantages. But those who ignore it, they may be stuck holding outdated financial vehicles while the smart money moves forward. So let's dive deep into the ETF evolution, how mutual funds are converting into ETFs, and how direct indexing is reshaping personalized investing forever. From mutual funds to ETFs, the evolution of efficiency. For decades, mutual funds were the king of retail investing. They offered diversification, professional management, and easy access to markets. But mutual funds also carried baggage: higher fees, limited trading windows, tax inefficiencies, and less transparency. Then came ETFs, exchange-traded funds, a game-changer. Unlike mutual funds, ETFs trade like stocks. You can buy and sell them throughout the day, often with lower fees and better tax efficiency. This made ETFs the new favorite child of Wall Street. But here's the real twist: many traditional mutual funds are now converting into ETFs. Why? Because fund managers see where the market is heading. Investors want low-cost, tax-smart, and transparent vehicles, and ETFs check all the boxes. This wave of conversions is not just a trend. It's a survival strategy. By converting mutual funds into ETFs, asset managers retain their investor base while giving them a more modern wrapper. The result? Billions of dollars are flowing out of traditional mutual funds and into ETFs, and this flow is only accelerating. Why mutual funds are losing the battle? Let's break down why mutual funds are slowly losing their dominance. First, cost. Mutual funds often come with management fees and hidden expense ratios that eat into returns. ETFs, on the other hand, are built to be lean. Some ETFs now have expense ratios close to zero. Second, tax inefficiency. Mutual funds distribute capital gains to all shareholders, even if you personally didn't sell anything. ETFs solve this problem with an in-kind creation and redemption process, which minimizes taxable events. Third, flexibility. With ETFs, you can trade instantly during market hours, just like a stock. Mutual funds, you only get the end-of-day price. It's no surprise then that even giants like JP Morgan, Dimensional Fund Advisors, and Franklin Templeton have started converting their mutual funds into ETFs. The message is clear: the future is liquid, transparent, and efficient. Here's the big hook: mutual funds aren't just declining, they're evolving into ETFs because the investor of tomorrow demands something better. The rise of direct indexing, personalization at scale. Now let's take this a step further. If ETFs disrupted mutual funds, then direct indexing is about to disrupt ETFs. So what is direct indexing? Instead of buying a single ETF or mutual fund that holds hundreds of companies, direct indexing lets you own the individual stocks of an index directly. For example, instead of owning an S&P 500 ETF, you would hold the actual 500 stocks in your portfolio. At first glance, you might think, why bother? Isn't that complicated? But here's the breakthrough. Direct indexing gives investors unparalleled personalization. Want to exclude oil companies from your portfolio because you're an ESG-focused investor? Done. Want to tilt your portfolio toward tech and healthcare while avoiding industries you dislike? Easy. And the biggest advantage? Tax loss harvesting. Direct indexing allows you to strategically sell losing stocks to offset your gains, lowering your overall tax bill, something ETFs can't do as effectively. This isn't just customization, it's optimization. Why direct indexing is exploding in popularity? Direct indexing used to be reserved for the ultra-wealthy because managing hundreds of individual stocks required complex technology and high costs. But now, with fractional shares, algorithm-driven platforms, and lower trading fees, direct indexing is becoming accessible to everyday investors. Charles Schwab, Vanguard, Fidelity, and BlackRock are all racing to dominate this space. They see the future. Investors don't just want diversification. They want personalized portfolios that reflect their values, goals, and tax needs. Think about it, millennials and Gen Z investors don't want cookie-cutter solutions. They want control. They want efficiency. They want portfolios that reflect who they are. Direct indexing is the answer. And here's the most shocking truth. Some analysts believe direct indexing could eventually surpass ETFs in popularity. ETFs versus direct indexing, the showdown. So does this mean ETFs are doomed? Not quite. ETFs will continue to dominate the mass market because they're simple, efficient, and liquid. But direct indexing is carving out a powerful niche, especially for investors with taxable accounts and long-term wealth goals. The real winners will be the firms that master both worlds. Imagine an ecosystem where you can hold ETFs for broad exposure and at the same time use direct indexing for tax optimization and personalization. This hybrid model is the next frontier of wealth management. Here's the suspense. Are we witnessing the end of mutual funds, the peak of ETFs, or the dawn of direct indexing as the ultimate investment tool? One thing is certain, investors are demanding more control, more efficiency, and more personalization than ever before. The old models can't keep up, and the new ones are rising fast. This isn't just an evolution, it's a financial revolution. And revolutions never leave the landscape the same. The billion-dollar opportunity for early movers. Whenever a new wave hits the financial world, the early movers always reap the biggest rewards. Think back, those who embraced ETFs in the early 2000s have enjoyed decades of low-cost compounding. Now, the same pattern is emerging with direct indexing. Asset managers are pouring billions into building platforms. Tech companies are innovating at lightning speed to make it seamless. Advisors are being trained to guide investors through this transition. And investors who understand this shift early are in the best position to benefit. The clock is ticking. This is not a 10-year-away trend. This is happening right now. Those who hesitate risk being left behind as the market shifts around them. Every year of delay means missed compounding, lost tax savings, and fewer opportunities to shape the future of wealth. History has shown one clear lesson. Fortune doesn't wait for the latecomers. It rewards the bold who step in first. What this means for you as an investor. So how should you approach this evolution as an investor? First, recognize that mutual funds are fading. If you're still heavily invested in them, it may be time to reevaluate your portfolio. Second, embrace ETFs as a powerful core holding. They're efficient, liquid, and battle-tested. Third, explore direct indexing, especially if you have a taxable account or specific values you want reflected in your investments. It could mean thousands of dollars in tax savings over the years, plus a portfolio that truly feels like it belongs to you. And most importantly, stay ahead of the curve. Don't wait until everyone else has moved. The biggest gains always come to those who act first. Remember, markets reward foresight, not hesitation. Every investor has a choice to cling to the past or to adapt to the future. The tools of tomorrow are already here. Direct indexing, ETFs, personalization, and they're waiting for those bold enough to use them. The question is, will you seize the moment or watch others pass you by? The future of investing: personalized, efficient, revolutionary. The ETF revolution showed us that investors demand more value for less cost. Direct indexing is showing us that investors also demand control and customization. The future of investing won't be one size fits all. It will be tailored, tax smart, and technology driven. So here's the final question. Will you watch this evolution unfold from the sidelines, or will you be part of the new era of investing? If you stayed with us until now, you know the financial world is changing faster than ever. Mutual funds are fading, ETFs are thriving, and direct indexing is setting the stage for the future. Don't just be a passive observer, be a smart investor who adapts before the crowd does. If this video opened your eyes, hit that like button right now, subscribe to the channel, and don't forget to smash the bell notification so you never miss insights that can shape your financial future. The ETF evolution is here. The question is, are you evolving with it?